Discovery is a financial services company operating in the health and wellness industry.
Right, so remember, it begins its life back in '92 when Adrian Gore came up with the idea of the medical aid administrator. But along the way, it builds probably the most profitable life insurance business in the country because of the vitality link. They know how healthy or otherwise you are based on your medical claims, and they've shoehorned that into a global business now that's really making strides with that vitality model.
Market cap is 80.5 billion rand, a PE ratio of 15, and a dividend yield here of 1.3%. Wayne, can I just take a little sojourn here and talk about this Discovery Insure driving app?
Which is why
it has changed my behavior. I've only had it in my car for 2 weeks. But
2 weeks?
2 weeks, but every single time I finish a trip, I check whether I've got my 5 stars. Terribly upset if harsh braking eliminates a star. I'm in the top 25%. I was in the top 10% until I harsh braked and cornered a bit, and now I'm back. But I'm going to get up. I'm going to get back there again.
But you see, that's one of the. You've just mentioned something that explains two major things that Discovery has got that maybe the other people haven't got. Their customers love them. They have one of the most loyal customer bases in South Africa, and effectively their business model has been to sell more and more to a very loyal customer base. Then the second thing is they are innovative.
To change a client's behavior, that's got to be way up
there.
I mean,
everyone talks about their vitality status and their vitality points, and you go to any Tashes and someone will be discussing Discovery product or vitality or the driver app or whatever.
I used to use, I don't know if you can get arrested for using your phone. I don't have the necessary devices or haven't been able to connect them, but I used to use my phone in the car all the time. I don't touch it. I do not touch it anymore.
And that system actually works, which is saying a lot, that it picks up that it's you and so on and so forth.
So look at their share price graph. Obviously the downturn recently in line with the broader market. But that's phenomenal.
It's phenomenal. They did a capital raise, which went well. They got all of that extra money in. Remember, internationally, they're just expanding in the UK, where they bought out the minorities in Prudential. They've done JVs with Generali, with AIA, with Ping On, with some other European and US insurers, where they get a profit share. It's trading well above where it ought to with regard to its dividend yield and its price-to-earnings ratio and its embedded value, but it seems that people love it.
Can I use another example? Because I think I'm actually a case in point for Discovery. They're not paying me anything, but I had a lot of short-term life insurance. We've discussed this before. Because I fly a lot, I'd like to be fully insured in that space. I recently consolidated everything, moved all of it to Discovery. Once I moved that, then I also was with another short-term insurer. I consolidated all of that portfolio into Discovery, and the ease with which I've done this has been amazing.
As I said, Discovery clients love Discovery.
But it's why I'm bringing that up is that it's competitive out there.
Yes, no, it's
to
very
move
competitive.
a client is quite a major thing to achieve as well.
But look, I mean, understand Discovery's business model. South Africa is selling new products to a very loyal client base. Overseas, they're expanding hugely, but understand expansion comes with one major cost, and that's cash. They had the rights issue. This company chews cash. So there's no dividend yield. There's no effectively free cash flow in it. So don't buy this if you want a dividend. This company's in a major growth phase.
It's in a high growth phase, and you can't expect a dividend from a high growth company.
Is not going to generate positive cash. This is the China's business, not going to generate positive cash for 4 or 5 years. The new deal, John Hancock in America, they effectively, as I understand it, they're rolling out Vitality there or something like that.
They'll get a
tiny
fee
cut,
based on the cost savings.
But the big one is still Ping An in China. In China, their business model is they get the clients on board as quickly as possible.
What is that? I've never seen that sign in television before.
A timeout.
Timeout.
All right, is that it?
I
see. Okay, timeout. Actually, this is wrap.
Hot or not?
So if you ever want to tell me again, wrap.
Oh, okay.
That's it. So hot or not?
I love this one. We own it in our portfolio. It is a bit of a go-go stock, but I think it's going higher.
Hot or not?
No.
You're not
shame.
hot?
No.
After my anecdotal evidence?
I think
You're
it's
not
just,
hot.
I don't like these low dividend yields.
Got it.